Hello, welcome to Prediction Market Analysis, episode number 1. No trades, just analysis. And before we get into any of this fun stuff, I just want to say one important thing. And that important thing is the most important fun thing that everybody likes, a disclaimer. I am not a financial advisor. Do not make trades or take this as a financial advice. Do not make predictions or bets on financial advice made by me. I'm only doing this for fun and for science. I'm going to talk about why this is science. Do not make a financial decision based on my content or anything that I produce. You are on your own beyond this point. Do not put me in that pedestal and say, hey, XYZ said this and I did this. No, you are wrong. If you take the financial advice from me, you are stupid. Okay, now that is out of the way, we're going to talk about today's topic, prediction market. How can we correlate events to different kind of scientific hypotheses? So first of all, I'm talking about big words, right? Prediction market, correlate, events, scientific hypothesis, TO2. What the hell, right? So what we are going to talk about is a simple event, right? Imagine if pigs could fly, will I be Superman? What's the probability that it is going to be a yes? Is it going to be, let's say, 50%, right? So if the probability that pigs could fly, I'll be Superman, is 50%, right? What would be the probability that the answer is no? Well, it's 50% because it could be either yes or a no. But before you make any kind of a bet in an organization or a prediction market or any kind of a platform over there is other two states that we need to talk about as well. What are the two states that we can talk about? The two states are a maybe and a maybe not. Okay, so before this bet is resolved, okay, so there is a lot of things that could go wrong with this. This could be true in any parallel world. Did I say in this world? No. So those are really important points. We're going to talk about that later. But before this is resolved, before this the outcome of this is determined, right, there is possibility whenever you are getting into a prediction market, all four of these possibilities could be true before it is resolved. It could be a yes, it could be a no, it could be a maybe, it could be a maybe not. So what we call this is a simple system of superposition, right? What we call this is a superposition for our understanding of the prediction. So what this means is it could be a yes or it could be a no. So we really don't know if this is 50% or this is 50% or this is 50% or that is 50%. So what we do over here is we make a 25%, we make this 25%. This is how I begin, right? See, and make this 25%. Ooh, yeah. I made that 25%. So what we have over here is 25% and 25%, right? But I'm going to ask you, this whole situation, right? This whole idea is going to be, this whole thing, this is before the bet, right? So before the result, right? So tell me, before the results, you could be in all four of these positions, correct? 25% maybe, 25% maybe not, 25% no, 25% yes. There's only four possibilities. Could be a maybe, maybe not, yes, and no, right? Correct? Before the result. But what happens after the results? So what happens after the result? My question is there. I'll give you, there's a quiz for you. What happens after the result? The answer is, and I'm going to give you an answer, there is only one outcome. Correct? Correct? Before the result, right? So before any of this happens, right, there is a 25% chance that you are going to have a yes, correct? And there is a 25% chance that it could be no. There is a 25% chance that it could be a maybe, and there could be a 25% chance that it could be a not. But after the result, there is only one outcome, and that is only possible if it is a yes or a no. It's a binary result, and the result is binary, either yes or no. There is no concept of a maybe. There is no concept that it could be maybe not. There is only one result, and it is either yes or a no. So you could take this and you could take it to the bank. You can go all of that. So whenever you have a result, there is only one outcome, either a yes or a no, and we call that a binary outcome. Why is it binary? Because binary means yes or a no. So before the result, it is in a superposition, right? So what you need to have understanding is these superpositions are only possible if you are doing the bet before the market is resolved, right? Any of these things could be true. Now, how did we get to the 25%? How did we get to the 25%? Are these all true? That's what we're going to learn today. How do we take this, whatever is provided over here, and then we get to the idea that, okay, either a yes or a no. How do we get through all this mess over here and get to a yes or no? Now we're also going to analyze this question itself. If pigs could fly, will I be Superman? Now there is a few set of things that I would like to see why these are correct or incorrect, or these are a vague question, right? Who is I over here? I could relate to anybody over here. Now there needs to be an attribution if I. Now if pigs could fly, by when? Where is the guideline for that, right? What is the power set of Superman? Is it absolute Superman? Is it Superman from the New 52? Is it Superman from the cinematic universe? Is it Superman from the DCEU? Is it Superman before Final Crisis or Infinite Crisis? Oh my god, everybody's going to think I'm a nerd, and I am a nerd, but you do not know what sort of a Superman you have. Is it the TV series Smallville Superman, right? The one that does not have any kind of flight during entire season, and that's why we wanted Superman to fly so much in that. Clark, I miss you. Anyways, that show had a lot of problems with the cast, but we're not going to talk about that. So anyways, if Superman could fly, would I be Superman? Then the other thing is, if Superman, is John Cena Superman? But John Cena is Peacemaker. So let's talk about something else, right? So how can we correlate events to different kind of scientific hypotheses? That is the idea of prediction markets. Why I utilize this is there is the idea that if there is a particular kind of event, let's say we have a event, right? And what I want to do from this event is make a scientific hypothesis. So what I need to do is hypothesis. Now this is too small, but anyway, you can understand. So whenever we have a hypothesis, what we can do is take this hypothesis and make a assumption based on that hypothesis, and based on that assumption we can do a prediction, right? So when you have an event and you have an hypothesis, you can create a hypothesis market. That's the basic bare bones principles behind that. But here are the simple rules of what we are going to do from based on this, right? What is the triggered rules? Simple rules. We analyze trigger points that cause the market to resolve. and we're going to talk about all of that. We try to find external trigger points that influence the market to resolve. We make a prediction which way the market is going to resolve, and we do not trade or make a bet based on our analysis. That's the simple rules that we have set. So, what are the prediction markets? Where are they? Where are they? There's fundamentally, when I understand and the given points for today's dates, there are two prediction markets. First one that I know is Calci. Now, why I'm going to say this is the first one that I know, this was the first one I was exposed to. And the second one that I know is Polymarket. Polymarket. Now, I don't have a horse, or I don't have a kind of association with either of these two, and you can access each of them using this. This is the platform where you can access this, chyau.com, and that's how the prediction market at chyau.com is provided, and you can access this using chyau.com. And then if you go to Polymarket, this is how the Polymarket looks like. This is the way it's looking at in terms of the UI and the UX, and these are the two links. Now, there's a lot of things that are related to this. Is this betting? Absolutely. This is like gambling, right? You are investing on events that could be true or not, and before the result you can always have a superposition, but after the results, either there is only one outcome, either a yes or a no. We live in a binary world. There is no maybe and maybe not, but there is only either a yes or a no. And these numbers are only arbitrary right now. This is in a random situation where we are analyzing if pigs could fly, will I be Superman? But here in these markets, and I'm going to show you how these market looks just in a bit, there is an idea that it could be resolved into a yes or a no. So, without much further ado, let's go. So this is what happens when you land. In Calci, there's all these kinds of categories where you can make predictions and earn money, real money. I'm not even talking about fake money or just crypto or any kind of money. I'm talking about fiat currency. You can do this. In some of the parts of the world, this is not allowed and this is not legal. Just like in my part of the world, I do not make trades. I just do financial and scientific analysis based on this, and I'm going to talk about that in a little bit. But then there are people who are actually betting on these and making money, right? So there are people who are betting on US elections, right? There are people who are betting on the New York City mayor elections. They're going to say they're even betting on, will John Bolton be arrested this year? If you don't know who John Bolton is, this is an interesting time to look up who John Bolton is, who will drop out of the New York City mayoral race. There's Curtis Silva, Andrew Cuomo, Oscar for Best Picture, one battle after another, Hamnet, different kinds of things over here. These are just politics, right? But the one that I'm mostly interested in, and the one that I utilize the most, is this one, because this provides me the idea that from my own background, I look into climate change and I research climate change, and this gives me an idea about how people are looking into this data and how they're doing predictions and making money out of this. And the resolution times is provided over here. Time until the market closes, 8.0 earthquake this month, will a category 2 plus hurricane make landfall? So these are all ideas where I can draw scientific hypotheses. The one I'm most interested in today, and the one I want to talk about today, is, will EU meet its 2030 climate goals? Now, if you don't know about all of this, there's different kinds of things that are related to climate change that I do. This is the one that we're gonna look at in a minute. Before I get into Polymarket, it's basically similar. You can see how it works over here, and you also have different kinds of geopolitics, earnings, tech, culture, world economy, elections, mentions. There is leaderboards, dashboards. You can do all of this. For me, what's really interesting is the geopolitics part. There is different kinds of geopolitics situations being betted on, predicted on, and analyzed and really traded on over here. And I suggest nobody to do this, but Antonio Guterres is prospective to be a Nobel Prize winner in 2026. Why is this still live? Because the announcement was already done by the time this video is recorded. But anyways, moving forward, any kind of financial decision that you make, you're on your own. Do not make a financial decision watching this video. So basically, these are the things that we see, right? But there is tech part as well over here. Which company has the best AI model? Was Polymarket US go live in 2025? Gemini 3.0 released by October 31, November 31. So they are even making craziest kind of bets and prediction markets and all of that over here. Elon no longer world's richest before 2026. How is this part in the tech? This should be gossip. But anyways, so let's look at big tech, right? I want to do one example from the other one and one example from here. Okay. Economy. Let's see. Big tech predictions, market, SpaceX, science. Okay, let's do science. I want to do science. Okay, there's a lot in terms of which one do you want me to do? Maybe I should do this live, right? But yeah, this is so US focused to be under. Okay, measles cases in the US. So these are the two examples from one of the biggest prediction markets over here, Calci and Polymarket, right? Simple rules: we do not trade or make bets based on our analysis. That's what we do, right? We do not, I want to highlight this with the laser. We do not make trades or make bet based on our analysis. That's what we do. Okay. So what is my analysis framework, right? What are the things that we need to understand to make sure that we have a really good analysis that has a scientific method? There is a method to the madness, right? So we're going to talk about that right here. So there are 1, 2, 3, 4, 5, 6, 7, 8 things that I really like to see. And before that, I jump back into the market's website. And one of the things that you can see, whenever you click on a market, there's rules and summaries over here. So what you need to do is view full rules. Now, whenever you click on view full rules, you get all the rules for that prediction, right? Now, this will give us all the things that we need in terms of the temporal boundary. A temporal boundary basically means the time it takes to resolve this bet. So let's see. These rules shall apply to this contract. So basically it's a contract, and the type of contract is an event contract. The goal refers to specified climate goal established by the European Union. At issuance, the goal will take place of reducing EU's greenhouse gas emissions by 55% relative to the 1990 level by 2030. So these are your temporal boundaries. The establishment of the scope of the period is the baseline that was established in 1990, and it's relative by 2030. The payout criteria for the contract encompasses the expiration values that the EU has hit goal. The goal is 55%. Is that the goal? And 55% compared to the 1990 levels by 2030, then the market resolves to yes, otherwise no. So one of the things that you can see is yes is trading at 53 and no means it's trading at 54. So it's sort of almost at a 50-50. But one of the things that we said during this period, we have a superposition. Everybody likes superpositions, don't they? So thing is, it could be a maybe, it could be a maybe not. Before the result, it could be a maybe and a maybe not, right? Because it's in a superposition. One of the key things that prediction markets allow is you can sell your yes tokens or no tokens before this is even resolved, right? That's really interesting. That's why I like the idea that it is in a superposition. The superposition only works if you are trading before the result. And what happens after the result? It's going to be binary. It's never going to be a superposition. It's only going to be a binary. So if you are trading from a position of a maybe not, right? Let's go to the same example. If you're trading from a position of a maybe not, then you have a higher chance of saying no. Correct? If you're trading from a position of a maybe, then you have a higher chance of saying yes. But if you're also trading from a position of yes, you are already having a higher chance of saying yes. There are ways where you can hedge this, and you see this. You should have sold at this time. Now, if you had sold at this time, let's say 6 hours, right? Let's look at the 6 hour, 1 day, 1 week, 1 month, 1 week. Let's do, so if you had done weekly, right? October 19, 4 a.m., right? It had gone red, and 53% chance of a yes and 46% chance of a no. So within a period from 3 a.m. to 4 a.m., just dropped 7 cents. So one of the things that we can see from these markets, one of the things that we can understand is there is a temporal boundary. You understand this part? Temporal boundary means, what does that mean? It means it is time bound. It is bound by time, right? There is a baseline from 1990 and it must be resolved before 2030. Now, 2030, that's 6 or 5 years away. Yes, there are long bets that are available. There are daily bets that are hourly, and there are long bets that are 5 or 6 years. There's a bet until 2035 available in these markets, right? So you need to understand this, and you need to make sure that your understanding of these things are really important, because these things will help us understand and take that next step in making that scientific hypothesis true or false, or a maybe not. But after the result is understood, after we observe the result, it becomes a yes or a no. There's only one outcome. There are no two outcomes, yes or a no or a maybe. Right? There's only one outcome, yes or a no. We live in a binary world. That's why you can do that. And you can also see that there is die breaking rule. For that, we need to understand and go back to the document again. The minimum tick size for the referred contract should be 0.01. So I want to explain what this 0.01 is quickly with a diagram over here. So for example, right, what is a probability, right? There is only two ways a thing can go, right? Either be a yes or a no. Correct? This is after the result, right? But if we say yes means 1, right? No means 0 before the result, what is, it could be between 0 and 1, right? Correct. So that's what we learned here in superposition. The only way you can get to is 100%. So what these markets do is the probability of yes is at 0.25, right? Means the market rate is 25 cents. Okay, let me take you back to the market. Whenever it's saying 53 cents, that means the probability of a yes is 53%. Probability of a no is 54% in this particular example, right? So 46% chance means you have a probability of 53 and a no probability of 54. But here's the thing, there is different kinds of market outcome. Since this is in a superposition, right, that means you could have a yes and a no in a superposition 25%. So in a binary market you can do that. So let me give you an example of a binary market, right? So let's get back to it. Calci. So you see over here 65 plus 37. How is this above 1? Correct? So you have 67%, 63%, and 37%. How is this above 37 and 65? That is based upon the rules set for that example. For here, right? For the earlier example that we had over here, the basic is the settlement date of the contract shall be no later than the day after the expiration date unless the market outcome is under review pursuant of rule 7.1. You need to go back to the rule 7.1. The position accountability level for $1 referred contract shall be 25,000 per strike member. So that is the position accountability level. Last trading date of the contract shall be the same as the expiration date. The last trading time will be the same as the expiration time. So we have set up all these numbers. The expiration time of the contract shall be 10 a.m. ET, that is the Eastern time. The settlement value of the contract is 1. So you can't go above 1. But how in the hell do we have 107 and for 100 1342? That is market economics. Any contract, one singular contract, the settlement value is not going to be above 1, but the amount of money that you're going to generate is going to be above 1. So with that we understand that there is a method to this madness. There is method to all of this. Now they have even given us instruction for press releases for the EU over here. That means when we get back to the boundaries and our analysis framework, few of the things that we were able to analyze, few of the things that we were able to provide was there is a baseline period. The calculation method is provided from the EU climate, EU press releases here. The spatial boundary is also defined. Spatial boundary is the boundary between the European Union as defined by the European Union document, European Union Council's website regarding its commitment stemming from the Paris Agreement. So it's all provided over here. The data source is provided. The threshold is provided for the time and everything else. The threshold is 55% and the resolution timing is also provided. Now in terms of a tie rule, the tie rule is also provided as per the rule 7, right? So this is our analysis framework and we're done. Are we? No. Now what do I do from this, right? How do I make a scientific corollary from all of this? Now what I do with this is figure out there are few hypothesis questions that I get from this, right? Question 1. How does this prediction market volume define consumption patterns in the EU? Now you must be thinking, what does this mean, right? What is he trying to say with this, right? So my question number 1 is, let's say we, by we, you and me, decided to bet on this market, right? And I'm just saying hypothetical, right? Like a paper trade. So how does this volume, right? For example, the EU climate volume and all of this, how does this define the consumption market? Let's say if there is a large volume of people that are saying yes to this, does that affect how the EU emit emissions? Does that define the policies, right? Now with this, there is sub question that I will ask myself, which is it's really interesting to see what are the sub questions that I can get. Question 1A: will this influence GHG emissions? Question mark, right? Now with this, what we like to do is a analysis based on will this influence GHG emissions. Why I'm particularly interested in this is because I want to plug this into dashboard.carbonupdates.com, my platform over here, and I like to do financial and scientific analysis based on this. Now, why this is so important for me is because of this question: will this influence GHG emissions? It renders my ability to make carbon contracts and then design these carbon contracts and try to bring these to make a positive change in the world. Or will this influence GHG emissions? How does this, now a secondary question that I'd like to frame and pose would be, question 1B. How does this affect carbon credits market, right? So now let's say if I wanted to price a carbon credit, and that's a real thing now, right? Now the third question that I would ask, right, within this type of a scope would be, now question 1C, how does this help me price carbon credits market? Now one of the other things that I could also see is question number 1D, right? I can come up with a lot of these questions because I'm just a curious individual. Question 1D, one direction, right? Right, correct. So how will this help shape COP30? Interesting. If you don't know, you don't know. How will this shape COP30? Okay, so these are the questions that I would like to be able to answer. So even with this, right? So what I do with this is, with this influence GHG emissions? Yes. So let's say if I were to be part of the yes part, right? I'd obviously lobby for the EU to have less emissions, because I would like insurance on this market, wouldn't I? Yes. So that means, will this influence the GHG emissions? Yes. Will this affect the carbon credit market? Now, before this, now we are in superpositions. This is where it's so helpful. Maybe. With the, in terms of maybe. Now I like to find the probabilities of this. This is where the math comes in. Now this is where we try to see and analyze it through math, right? So maybe not. I'm really not thinking this is the level of analysis the COPE people do that, right? So maybe not, right? So out of all of this, now when I take a stance on this, right, I'm taking a position on this, I'm being bull about this, right? Now I take all of these. Now I try to figure out a financial mechanism on how to let's say take that analysis and make it on my own. So how do I dig this analysis and make it on my own? I don't know. I really don't know. Now when I say will Will this influence GHG emissions? Yes. Uh, what would be the answer behind this? If I try to analyze these positions in terms of the influence, uh, to have a mathematical equation to find uh, probabilities for these questions, 1A through 1D, right? I go up to any kind of a search engine or an AI engine, they'll be able to answer my questions, right? You go on Perplexity, you go on ChatGPT, you will be able to answer all these questions. But fact of the matter is, we need to be able to answer these questions on our own. We need to be able to do these answers and figure out how we do scientific analysis based on this on our own. So um, that's what we need to do, and that's what we need to figure out, right? So with this, I leave this first episode, and I like to stop it because at this point you kind of understand where the prediction markets are going, and we kind of answered the first question. No trace, just analysis. So we're just doing an analysis. And will I say what is my hypothesis and figure out and answer this question of will will EU meet its 2030 climate goals? That's for episode number 2. We're going to answer this question and we're going to explore more into episode number 2, and then we're going to figure it out. Okay? All right, perfect. See you.